All right. Boom. Break over. Let's get started. Welcome back. And for some of you, welcome out. Um I think I might still have that. Do I? Maybe I don't have the fan. Nope, I don't have the fan. Yeah, I can show that. Absolutely. Um how many screens are most popular? So it's funny because yeah, I know people who love 4. I have 2 big screens. And they're not enormous screens, like 24-inch screens, like not like I've like someone's like, "Oh, I got a 40-inch monitor." I'm like, "How do you even see that?" I like to be able to look at one and work on the other. I like to be able to move things around. I think it's a personal preference, but 2 is minimum, I would say. If you're on one screen, it's so hard to move it. I'm sure if you're with 4, you're like, how do you live with 2? Right? But yeah. Okay. I started the recording again, so we're off and running. Welcome to the working sessions, intermediate, advanced session, but this is really just ongoing, so nothing's changing. I'm still Scott. It's just a little later in the night. These are still the disclaimers, and we're still going to the platform. So magnificent. What are we talking about? Real quickly, we're going to take one step back and just talk about, a scoring mechanism. So if I were to quickly define, I have to give it more room because I have 2 intermediary points, right? I know my line's not fabulous there, but this will give you a good sense. So I'm thinking 3, 2, 1. So when we were in this trend here, we had been calling that about a 1.75. You can see it was very close to that. This can get stronger. It can be stronger than what we had there. So that's kind of the fan where, as you draw it and you have your dots and you connect your lines, once you have your line the way you like it, you'll be like, where does this thing sit? Now, remember that we're orienting more to the upside than the down until we get into a convincingly bear market. So right now, people are like, wait a second, Scott, how are you possibly scoring not a minus? How are you possibly scoring this a 0.5 right now? Because right now it's just losing points. It lost it here, it lost it here, it lost it here, right? So it lost it here. So as that's happening, we're taking it away, and it can earn those points back if the buyers start getting higher highs and higher lows. Then it's like, oh, let's give it a quarter point, give it another quarter point, until we see whatever the next discernible trend is. I would say right now we don't have a discernible trend. We have some transitionary price action. We're waiting to see what it transitions to. So we're going to be somewhat flexible, fluid with our scoring process. Hopefully that makes sense. Let's go back down to the 1 month daily. Wrong chart. 1 month daily. And what are we trying to identify? Anything above average. Okay? Anything above average. Let me get a little bit more room here. Now you can see, where's my above average times? Can I draw a rectangle? No, I can't. Okay, so I've got these 2 here. I've got these 3 here. I've got these 3 here. Whoops, cut that one off a little bit. You get the gist of it. And then I've got all of these now. All of that's is scoring and will be scored, although, by the time we get 3 more days of market, this drops, this drops, this drops. So this over here on the left is all the way over, which makes it stale, and it cancels anyways. We have a buy day, then a sell day. We really don't care. All we care about is this over. This is what we have, and this is what we're going to have for a while. I have 3 days here. I consolidated it to 2, so I gave that 2 X's. I would say this one here is X, X, check. Now, what do we have? I would say we have a check here, an X here, an X here, an X here, check here. What am I doing? I'm finding any above average volume days, and I'm giving it either to buyers or to sellers, or I'm going to say it's a wash. Everything in here, other than just the fact that these 3 days only, I mean, you can see that these 3 days literally did less than half of what this thing did, although it finished here. But still, right? So that's why I'm only giving it 2. So 1, 2, 3, 4, 5, 6, 7. I have 7 sells, and now I have 4 buys. 1, 2, 3, 4, 5, 6, 7, and then 1, 2, 3. Sorry, that's too many. I lied. That's a lie, Scott. 7 to 3. Is that what we had before? Was 7 to 3 or 6 to 2? Anyway, that's about the same. If we get one more buying day this week and it goes from a 3 to a 4 and it's a 7 to 4, I'm gonna say, oh, that actually goes up a quarter of a point. Instead of a minus 0.75, which is where we are now, I'd go to a minus 0.5. So as the imbalance from sellers to buyers diminishes, we start scoring it closer to 0. And when we start having more buying days than selling days, then we score it in favor of the buyers. So that's all we're doing here, is saying when we have, why did I X a buying day? So Graylin says that on 7 to 2, oh, we've got one there, one here, one here, and we just got one today. So that's the third. Now, this one, let's getting ugly. Let's isolate next to the last X. Next to this one here. Is that a buying day? Let's talk about it. Do we consider that a buying day? If we measure from open to close, that was a buying day. But we are measuring prior close to this close for this exercise, right? So even though this candle was off of the lows for the day before it closed here. And then the next day it closed here. So it dropped this much. And on Monday, right? Remember, you're talking about Monday. Think about the headlines you read on Monday about how much carnage there was. That wasn't a buying day. That was a white candle, which means we were off of the lows because we gapped down 4%. 4% we gapped down. We only ended up down 3%, but we were still down 3%. Yes? That is what we're trying to evaluate. So it's always from close to close. If all we see is the candle, it can be misleading. We need more context. It's a great question because you'll see this. And there'll be times where we give a red candle a positive score for the same reason. It gaps up, doesn't do anything during the day, but the gap up is what mattered most. So right now I would say the volume is set to stay the same. If we get one more buying candle, then I would actually say it's going to improve. And that's where we start to see things stabilize, where We're like, well, if we drop a quarter of a point on the short term, but we raise a quarter of a point on volume and everything else stays the same, we might have the same score. And that's meaningful to us. I'm not predicting that. I'm just saying that's what we're keeping an eye out on. Okay, let's keep going. So that's volume. Let me know if you have any questions about volume or if that covers it. That's the first half. Now we have all of this. Our thoughts are probably going to stay the same. Here, drop here, stay the same, maybe increase. So right now, it looks like we're only going to drop a quarter of a point on the first half. Well, that's better than we've been doing. So if that's where we start to see stability, great. Major market. Major market. This link is found in the resources. Let's start over with a reload. Okay. What are we looking for here? So this is where I was saying we're 200 days, so we're about 9 months back. This analysis is taking the Dow, the NASDAQ, the Russell, the S&P based on their ETFs, and they all start right here at 0. And then it says, what did they do? They all dropped a little, then they all raised up. You can see that back here it was the small caps, and then they came back down. And then it was pretty steady and dropped. All right? And so this is just showing us who's leading, who's lagging, what's going on. Well, the NASDAQ was the leader for the majority of the time, and even now after this retracement is still the number one, right? If we look at the Russell was holding up for a minute, and then it gave it back, but still ahead of the Dow from this time frame at least. There's the S&P. It's our watermark. It's kind of that middle ground of broadness. And then here we have the blue chips down at the bottom. Never really got exciting in here like the other ones did. So it hasn't given back as much as the other ones did, conversely, right? Okay. Now, that's it. This provides us some starting context. Now we drop to 133. That's 6 months. Same analysis, but we've now restarted the 0 point. This is no longer in October. Now it's in January, late January. Now this is where everybody starts at 0. And what happens? Right? And you can see we had that surge right here in the small caps, but now we've given that back. Okay, where are we at the end of the day? We have the Russell, or we have the S&P in the lead, then the NASDAQ, then the Russell, and then the Dow. Okay. I mean, is that like wildly bullish? No. Does it hold up that our bullishness is still intact? Yeah, I would say so. Now, you can see that the Russell has fallen back below the market, which is, something that we were paying attention to. So could this score drop to a 0.5? Yeah, maybe. We'll see. Okay, let's drop this down to 66 days. So we were at 6 months. Now we're going down to 3 months. Same analysis. We're starting here at 0. You can see what was good, what wasn't. And right now, everything is kind of right lockstep. Overall, though, the Dow is still in the bottom. The NASDAQ still holding up to the top. It's been a correction, but it's been a broad-based correction. It wasn't a defensive realignment correction. That's what we're looking for here. Do we think things have fundamentally shifted, that The market's now more defensive? No, if we did, the Dow would be moving into a leading position, and it's not. It's not. But I want you to notice that the Russell has fallen back into that. We had this race. We were watching this race for so long. Right? We were a 0.5 because the NASDAQ was leading the whole way. But that was as strong as we were. And if we ever thought that the Dow was going to come in, we would probably lower our score. But ultimately, we thought, hey, look, it's the Russell that moved into that leading position, so we raised our score. At this point, I think we'll give that back. So I do think that this is likely to drop 1/4 of a point. So I think our market posture is still likely to drop 1/4 to 1/2 point this week. But that's still stabilizing when last week we dropped 1.5 points. So it's not always the number, and it's not always even like, week to week. It's the trend of the week to week. Is it expanding or contracting? So there are some subtle parts of the analysis, but like I said, if what we do is not subtle, if everybody does what we do, then why would we expect it gives us any kind of an edge? We're trying to find a process that helps us see things just a little bit sooner. And that's where it provides an edge. I hope that as you look at what the VIX did and how we talked about our concerns with it and how they played out, you can see that, we want to see things that's just a little subtle and a little bit different, but hopefully just a little earlier is my thoughts. Okay. Questions about this? As of now, like I said, I think it's going to drop. Now, if you're ever confused about the score, like I'm not sure if I'm going to go this way or that way, we'll go to 22 days. Or we just go to 22 days in order to say, hey, what's going on? On 22 days, this actually is quite hopeful. The Russell, despite the fact that it's given back that everything, it's still ahead of everything else. It's still ahead of the Dow. And even though the NASDAQ has had this full correction down to this point, we know that the last time it went like this, the opportunity was born coming out of this correction. So overall, I'm still going to keep my score at 0.5. It's still bullish, but it's not 0.75 bullish. It's definitely 0.5 bullish. Agree, disagree, thoughts, questions, concerns. Let's keep going. That's major market. Sandy, good to see you. Always glad to have you. Have a great night. Hope to see you in the morning. Or have a great morning. Hope to see you tomorrow night. Here is the sector rotation. Same analysis, you guys. Everything about this is the same. Starts at 200, then we drop it down to 133. Then we drop it down to 66. Then we drop it down to 22, and that's the progression. We're looking to see strength and momentum as we move through those time frames, right? So we come in here. What's the starting point? Financials is still holding up as a leader. Utilities as a leader. So that's one defensive and one growth. In here we have communication services. Industrials, those are both growth sectors, and we have healthcare, which is technology is not too far below. So yeah, it's rattled, but overall, more than not, growth sectors are towards the top. Energy's way down here. Materials are way down here. Oh no, that's discretionary. Man, I'm misreading this. That's not great. We don't love discretionary coming down that low. Okay, so let's move in now. That's kind of what we're looking for. So what are we looking for here? We're looking for growth sectors. That's going to be things like financials, industrials, technology, communication services, consumer discretionary. We're looking for defensive things like utilities and consumer staples. And then we're also looking at the cost of things that might give us inflationary reads. Things like basic materials and energy. That's what we're moving through here to go through this information. Now you can see as we go to 133, huge concern. Look at utilities spiking back to the top. Huge concern. Energy was at the top but turned over. Financials near the top. So this has us concerned as a second analysis, but we don't score it until we get to the third one, which is 66. Started strong, then it got weak, now we're here. Who's leading? Utilities. Problematic. We're definitely what's our score here? We're a 0.25. Okay, maybe not. So we're barely holding on to bullishness here. What do we have? I think utilities is going to take it to a 0. Anyone want to weigh in on that? Communication services is still near the top. There's healthcare. Financials is still holding up. Technology is near the top. So, I mean, I'm not going to take it negative, and I may still leave it positive depending on the next 3 days. I may still leave it as a positive point because more than not, growth. What's down here? We still have energy at the bottom, materials at the bottom, consumer, the staples at the bottom. Well, the more we see growth sectors leading, the more we're going to score it favorably. The more we see defensive sectors leading, the more we're going to veer negative. So we do have a growth sector, a defensive sector leading, but it's only one, and everything else is okay. So I think right now you can see we're barely bullish, 0.25. We've come down. I could see it staying there. I could see it dropping back to 0. I don't think it would go up. I don't know. So I could see right now our score anywhere from 0.25 to 0.75 worse. But not much other than that. If you're uncertain or just to get a look ahead, we now go to the 22. And that's more concern. Utilities at the top. Materials at the top. Healthcare at the top. Industrials and financials are close but leaving. Staples is emerging. Technology's at the bottom. Yeah, as of now, this is concerning to us. I would say probably gonna drop a quarter point to a 0 the more I think about it. Okay. Questions about that? Definitely let me know. And let's go finish this. Let's take a quick peek at our futures. So we actually start at 200 win some. 200 days is the default, which is 9 months. Then we go to that bottom right-hand corner, double click on it, change it to 133. My chart doesn't look correct. Did it change? What doesn't? You have a different reading on the 22 day? I'm all the way to the right, and I have utilities at the top. What do you have? 200, 133, 66, 22. No 124 in the middle there. We're working off. We basically look at 1 month as 22 trading days. So those are in basically 22-day increments. Other than we start at 200, which I'm curious now. 200 divided by 22, 9.09 months, right? And then we have 6 months, and then 3 months, and then 2 months. That's the gist of it. Yep. No problem. Okay. What else? Volatility. Volatility. Okay. Where's my chart? Sorry, I lost my train of thought. VIX. So, first and foremost, I think this was just an outrageous overreaction between this and this. That was 26 points. You'll be hard pressed to find much in that vein. As far as within a same day. And you'll notice by now we're all the way back to 27. It really never should have been above here, quite honestly. But it was, and it was nasty for a minute. What now? Well, if we have another bullish day, we would expect this to come down again. And then if it has a flat day and then a couple of selling days, it might do this. But remember that right in here, a de-escalation that equates to a lower high, that would be the same right there. That's a lower high. It spiked up. It dropped. Up, down. That's it. Right? So if you look at that day, do we think that's the day that we would want to be more bullish on the market? Bam. You can see that confirmation came perfectly. At the start of that next move. That's what told us this had finished its tumult. So yeah, we're now thinking that something similar may be happening now. If I go back to the VIX, so this chart makes more sense. Does it give us that kind of a de-escalation pattern? So right now, a lot of people are like, oh, the VIX was so high, we're all so nervous. But we should be thinking, hey, if that nervousness reverses, that's the time to get in. Scoring wise. Last week, we already dropped it. This will be interesting, I think. We already dropped it 1/4 of a point, and that 1/4 of a point was for a higher high. It was for this higher high right here. As of Friday. Then as of Monday, it did this and made it an even more higher high. But I don't know. We already scored that higher high. I don't know that that's going to drop. If I've already scored that, the fact that it overreacted so much when it was still in the process of making the same one. I want to hear from you guys. Anyone who feels more comfortable with seeing the VIX, let me know. Meanwhile, my mouse is doing that thing. I figured it out. I solved it. Very nice. Okay. Yeah, we'll see what it does. We'll have to wait and see the rest of the week. I think it's going to drop, but maybe 1/4 to 1/2 point overall. Which, if we've been dropping 3/4, 1 1/4, 1 1/2, and then all of a sudden we drop 1/4 of a point, we're like, well, wait a second. That's stability. That's stabilizing. So that's my thought going into that. What does that mean for us? Stabilizing isn't enough. Stabilizing needs to improve. We may start getting some signs as it stabilizes, but I don't think it would move. I don't think we would see signals until early next week. So this is a week of patience and discipline. What would cause the VIX to spike like that? Institutions. Institutions overreacting to the news out of Japan and what it means relative to our probability of moving into a recession. That's what I would say. Okay. That, I know it took the full beginner / intermediate session, but that's the full posture. And, that we'll be able to fly through tomorrow morning when we check in on the posture. We'll go through. But anyone who's new, especially, questions, is it, do you see it? One thing I want to flag is we really are careful to never be where we would call it dogmatic, where it's like, we have to do this. We must see it this way. Our intention here is to objectively look at the market and assess it. And if we do it every week, then when we see abnormal conditions show up, we can be like, whoa, something's going on here. We may not know what, but just that we know it, we can alter our plans and our risk management levels. So I want you to notice that we've been talking about lower risk levels for the past 2 weeks, 3 weeks. There's no way we should have been caught off guard and been like, oh, I've got so much. One of the, for you new people, yeah, I'll have these videos posted in the recordings channel pretty quickly, PJ. So look for those to be in the, actually not in the resources, but in the recordings channel. Yeah, us just staying with this objective analysis, our intention is to just simply say, have we considered everything? Are we seeing the institutions? Are we seeing the short-term traders? Do we see the sector rotation and understand how money is flowing? Do we understand the sentiment and if it's changing? And so, yeah, we don't think we have a crystal ball. I mean, I always have my magic 8-ball at my desk. But we have a pretty good process to make sure we're never, right? The analogy I put out is the frog. The frog in the pot of water. And all of a sudden it's like the water's heating up. The water's heating up and the frog's like, everything's fine. And then all of a sudden it's like, oh my God, what's going on? So people right now are looking around like, is this water boiling? What should we do? First of all, no, I don't think the water's boiling. It's gotten nice and warm for sure, but I think we can still just relax and enjoy the soak, right? No need to splash around and jump out and make a mess of things. We'll ease into whatever is next. Talk about it, process it, go forward from there. Check the group downloads and market posture. So the market posture log, correct? That's the resource that needs to change. I just need to alter that link. So yeah, Bob, I'll put that in. I'll post the recordings and change that log this evening as I wrap up, and make sure that I get the recordings posted very, very quickly. Yeah, no problem. So let's just have, for the last 3 minutes, a quick temperature check, because one of our objectives is, if you're new, can you come in and onboard? I mean, it's a lot. It's a moving train, right? The train's moving, but hopefully we're creating enough opportunity for you to feel like, yeah, I can kind of get up to speed and then get on the train and not feel like I'm at risk, while at the same time not slowing down the train so the people on the train are like, hey, we're just not getting anywhere now. That's the delicate balance we're striking. PJ said drinking from the fire hose. And that's to be expected, right? But hopefully what you feel like is you have the resources through the channels and other members through coming to these to process and say, hey, let me ask some questions, through working on the documents that we provide to get through it and say, yeah, I'm gonna get to where I'm glad I drank that fast because now I'm at a good point. So that's the objective. But if there's any time where if you are new and you're feeling overwhelmed to the point that you're thinking, if you ever thought I'm gonna bounce, I want to leave, it's just not for me, pop in, give us a chance to see what would make this group more amenable to working on it. Thinking the train is speeding, but woohoo, okay, I love that. It's a fun train. It's a good train. The company in our car, top-notch company, man. Like this is this is the car you want to be in. The other cars, not nearly as good. They got a lot of chimpanzees in their cars. Oh, we got nothing but professors in our group, professors and the such. Anyways, okay. I do think of Jumanji when I think about it going wild. The original is a movie I watched with my kids when they were younger. I love that show. So anyways, it's good to see everybody. Let's call it a night. Let's convene in the morning, 15 minutes before the market opens. We'll see what the futures tell us, what we expect from the market, what we think our next signals may be. And we'll be water every step along the way. Thanks, everyone. Have a great night. Happy trading.